there is something oddly soothing about reconciliations. I, for some reason, have found myself doing one somewhat recently and was like, oh, I kind of miss this a little bit. But yeah, not necessarily every single month, but just a little bit.
Or just nerds.
Yeah, just nerds. It feels good when it balances. You get you get that little dopamine hit. You know, it's a good feeling. Hey, what's up, everybody? My name is Mike Whitmire. I'm the co-founder and CEO of Flowcast, also proudly an inactive CPA. Welcome to Blood, Sweat, and Balance Sheets. I'm really excited for today's episode. We have John Hardy on the line, and John and I actually go way back. He was one of the very first Flowcast customers, so I'm excited. It's been cool to watch your journey in your career and how much feedback you've given us about the product has been amazing. So, welcome to the podcast. Really excited to have you today. How you doing, man?
Doing well. Happy to be here.
Awesome. Well, let's start with some just like admin stuff. Where you tell us a little bit about yourself, where you located, what's the name of the company you work at, and could we do like a high level career journey as well?
Yeah. So John Hardy, I'm outside of Portland, Oregon. Been in the software space for the last 8 years at 2 different companies. Started my career not in audit or tax. I went to Levi Strauss & Co. out of college and worked on their European accounting team. And then transitioned to software after that, diving into RevRec, process, implementation, streamlining close for 2 companies, implementing NetSuite, implementing a whole host of other software products. So that's kind of the high level. So I work for Lead Venture, which is a software company that services over 55,000 dealers with software solutions to help them sell more stuff to their customers. So that's power sports, boats, RVs, kind of all the fun stuff, as well as kind of ag equipment and other less exciting stuff as well. But that's kind of a little short story.
And you guys are at Lead Ventures. You're highly acquisitive, is my understanding of the model. Can you tell us a little bit about what it was like being at Levi Strauss versus some of the growth company you were at after that versus the acquisitive company?
Yeah, so Levi Strauss was pretty well established, and so they had their way of doing things. And they had their systems in place, and so kind of my role was keep the well-oiled machine running. And so when presented with the opportunity to join a rapid growth software company that had recently been backed by a PE firm and was acquiring rapidly, I decided to jump ship to kind of get exposure to that world. And so in my time at my last company, we acquired 7 different businesses, I think, while I was there, integrated them into our systems, did some pretty significant process improvements while we were there. And then ultimately that company exited by way of being acquired by a publicly traded company. So I stuck around there for about a year after that acquisition took place. And then I was approached to do that entire process all over again with Lead Venture. And so I jumped on the opportunity because I think it's a lot of fun. It's a lot of work, but it's a lot of fun to kind of be a part of that. So in the last 3 years, we've acquired 7 different businesses while I'm here, and acquisitions are still very high on the priority list for growth, whether that's competitors or complementary products to roll out to our customers. And so it's been a lot of fun diving into all these different businesses and trying to figure out, how are you doing accounting? How should you be doing accounting? How do we get you integrated into our tech stack, into our accounting teams? And that's kind of where my role focuses pretty heavily today.
And that's where the operational title comes into play, right? You're acquiring these companies. You're either keeping the team, retaining the team, or working them into your fold with processes, systems, technologies, and everything. I want to take a step back to your time at Levi Strauss. So you started as an accountant, not an auditor. That's most of the people I chat with, they did their time in audit and moved on from there. But I'm actually a big advocate for starting in the trenches and doing accounting before audit. So can you tell me about, first of all, I guess, what title did you start at Levi Strauss? How long were you there? Did you have career movement while you were there? And then kind of how did title progress at your next companies? And how do you think that kind of in the trenches work might have helped with future work that you did?
Yeah. So when I started at Levi's, I actually did an internship my entire senior year there in their intercompany team. And then as as I neared graduation, they offered me a job as an accounting specialist. And so as a poor college student, I was like, being offered a job, it'd be dumb to say no. And I had the company and the work. So then was there. So I was an intern for about a year, then was an accounting specialist for about a year, then got promoted to senior accountant after a year there. And then I was only in a senior role for about 6 months before I transitioned to a senior role at my last company, Viewpoint. And so started at Viewpoint as a senior accountant, then progressed into revenue when ASC 606 came out and the world became much more complicated. So I moved into a revenue specific role. And then as the team grew, got promoted to accounting manager and oversaw the GL and RevRec. And then when I left Viewpoint, I moved to an assistant controller role at Lead Venture, did that role for about a year and a half, and then got promoted into this director of accounting initiatives role. And going back to your question about kind of how it framed me, I think I got a lot of practical skill set by joining Levi's. Just simple stuff like, hey, here's a month-end close, here's how it works, here's how it's established. Early on, they said we need to get closed from 5 days to 3 days. And so we were challenged to figure out what processes can we scrap, what are things we're doing that no one's asking for. My boss was super supportive and told me to question everything, ask why we're doing stuff, because he wanted new blood in to kind of figure out what have we been doing for 10 years, and it's just because we've always done it, and where can we challenge. And so his mentorship in doing that, I think, really set me up for success at Viewpoint, at Lead Venture, to kind of take on those types of optimization and improvement roles.
Yeah, that's an amazing first opportunity to have and a great first boss. It sounds like I was not expecting that answer. I thought you were going to say, oh, I learned the ERP and was booking transactions and was reconciling accounts at the end of the month. And that was kind of it. And then I moved up, not like you were in those meetings discussing change at a company of that size. On that note, how big is the accounting department over there?
At Levi's?
Yeah.
Large. I was a small fish in a massive pond.
So you're a 22-year-old swimming amongst hundreds of accountants over there trying to affect change?
Yeah. At least change within my broader team. And there were plenty of reconciliations and journal entries. But...
All right. And then I know damn well you had to work with the auditors at Viewpoint as well. Can you tell me, like, based on working with auditors versus your experience, do you get a sense of like, my background was more helpful for my current job versus what these people are doing?
I'd say because I didn't do audit, there are definitely skill gaps that I wish I had, and I wish I would learn.
Can we dig into that?
Yeah, I just think from like how you're trained and how you approach things is different. But there are challenges to that. So like when I'm thinking about stuff, I think about it from a very practical, how do I get this done? The auditor perspective is, yes, how do you get it done? But how do we know you're doing it right? How do we know you're not doing too much? And so I go in from it from one point of view. And since I never had to audit it, I don't necessarily think about that first, which I think you should probably think about it simultaneously. So I'd say that's one gap. One thing I will say is I've found that in a lot of audits, when you get those first years, you're teaching them some of the basic accounting that you don't learn in school that you probably should learn in school. And so some of the inefficiencies in the audit are just trying to get some people up to speed a little bit. Obviously, that varies by audit team and by firm and just the individual. But there is kind of some of that. Here's a cash reconciliation. Here's how it works type of conversations that you're hoping to not have to have.
Which you do have to have, even though they have presumably audited bank recs a decent amount. I will sheepishly admit that I failed my journal entry test at Cornerstone when I was interviewing there. They still hired me, fortunately, but I missed one transaction along the way. And so I also did 606, and I have to imagine, you and I had like very different approaches. I was, in thinking back, you making that point, I was very much like, I need all the documentation around this. Like, I need to be ready for auditors and everything's going to get audited. But that absolutely slowed down like the implementation phase. If I could have just like gotten some of that work done quickly, got it off the ground, that's probably what a pre-IPO company needed, a fast growing company like that. That's probably more the mentality that would have been helpful. But Yeah, man, I was just too into getting documentation ready and trying to like be prepared for every single transaction get audited when that. I don't think that's the right mentality at that stage of business.
Yeah, it would slow like fast answers to some degree. Like I remember when we first started the 606, like the first question we got was, what's the impact? It's like, okay, well, it's a 400 page book that I've got to go through and figure out what the new rules are. So it's definitely like the executive team and the board was like, we want to know what the impact is to the business today. It's like, okay, well, it's going to take a little while to try to interpret the guidance, work with our auditors, work with other software companies in the Portland area to figure out like, how do we read this? How do we treat it? And so it took quite a bit of time to get there. Unfortunately, we were acquired in the midst of implementing 606. And so we kind of had to start from scratch a little bit.
Oh, man.
When the new company came in, and we also had to implement in 3 months because we had to be ready for the first quarterly filing. And so our 606 road was a little bumpy, but learned a lot, which was the goal, I guess.
Oh man, I like want to ask some very nerdy questions, but don't want to go too in the weeds for the audience. Sorry, I'm going to do it real quick. When you join a new company in the middle of ASC 606, for those who don't know, 606, a big part of it is valuing the various line items that you sell and coming up with a fair market value for what you're selling. Does like joining a new company affect that analysis at all, or you just keep leveraging historical data?
They ran it on a different time frame. So we were doing calendar year. They did kind of a mid-year to mid-year convention. And so eventually we had to convert to their structure around timing. But for the most part, that aspect of it wasn't different. So that was helpful.
Okay. And did you were you able to use VISO, or did you end up having to do estimated selling price for allocating consideration?
For the most part, we were able to use data-driven SF.
Oh, that's nice. All right. So you had some transactional competitors out there you could compare to and everything, and not just like, I was finger waving like, oh gosh, every contract's discounted. No one actually sells what we do. Like, how do I do this? So, man, I'm jealous. That's nice.
Yeah, it worked out all right.
Cool. All right. Now, so I want to go back to your time at Lead Ventures. You started as, so the role was assistant controller, and you got your bearings there. Did you hire out a team while you were there?
Yeah, so I joined at an interesting time. So this is pre-COVID, right before the big work from home. And so Lead Venture brought on a new CFO when I started. And so he wanted to build a new team out for the finance organization to get it ready for scale. And so I was kind of the first hire for that new team build. And so I was employee one. And so we then built a whole new finance and accounting team based out of Portland. COVID hit, so now we're spread all over the place. But kind of as part of that transformational change, we implemented NetSuite, we implemented Adaptive Insights, and we kind of redid the entire tech stack to kind of set the company up for success while also adding quite a bit of headcount to support the acquisition growth, to support kind of a faster close. And so we kind of restructured the entire finance organization late 2019.
Okay. And you said after COVID, people are now spread all over. Is that because people from Portland move, or did you guys open up to remote hiring?
We opened up to remote hiring quite a bit. I think a lot of it was driven by challenges in finding local talent, but then the company decided ultimately we're going to adopt hybrid anyway. So why hamstring ourselves to one talent pool when we can kind of open it up? And so now there's still a predominant kind of centralization in Portland, but then there's people everywhere outside of that.
And how do you think that impacts culture? What types of things have you done as at that assistant controller level to kind of keep the team together, have good communication, so on and so forth?
Yeah, we try to do, like when COVID first started, we did like virtual happy hours kind of consistently every Friday, especially since everyone was so new, to try to get people familiar with one another, chatting. We try to get together every now and then throughout the year with some of the remote people to kind of gather them to the Portland area. Those in the Portland area will go do happy hour live now. So we try to set up kind of social events to continue that, to try to create culture. And then our HR department's been putting together events and virtual events and stuff to try to get team camaraderie throughout the kind of remote world.
Makes sense. And how big is the team now?
Around 30 or 40 in total now.
Wow, nice. Congrats, man. So you started at 0, and that's a good sized team to build up.
Yeah. So it's grown quite a bit.
All right. So John, when I met you at Viewpoint, you were a NetSuite user, and then you went over to Lead Ventures and implemented NetSuite. What learnings did you have through those processes? Like, did you learn anything that was messed up about the Viewpoint setup that you wanted to apply to the new company? And when implementing NetSuite, how much did you learn about the business, and how helpful was that process?
Yeah. So at Viewpoint, I had used NetSuite for about 5 years. And so kind of one of the key things at Lead Venture was implementing NetSuite. We kicked off implementation about 2 months after I started. And so from a NetSuite side, I was pretty comfortable with like how it should work and kind of the day-to-day should work through NetSuite, but I knew nothing about the business. And so when I implemented NetSuite with the team, it wasn't just me, obviously. A lot of my questions around the implementation were more on how does the business operate and kind of how should we be thinking about this in the context of the business. And so as we interviewed the executive team, what do you want to get out of reporting? How do you want to be able to slice and dice data? That kind of structured a lot of our kind of setup and configuration by asking, what can't you get out of the existing financial system and what are you hoping to? And so we were able to leverage those conversations for figuring out, okay, how do we need to structure the chart of accounts, departments, classes. We ended up adding a custom GL segment to facilitate some of the additional reporting needs. And so we were able to use a lot of those interviews to structure kind of the baseline. And then in the implementation itself, it was pretty straightforward. I think a lot of the challenges came with data migration in just having bad data. I think that was really where a lot of our challenges came in migrating contracts, converting SKUs, figuring out what SKUs do we need, which ones do we not need, who is on contract for what. So a lot of our challenges came from data migration. We were also consolidating 2 ERPs into one at the time. So you had to kind
That'll do it.
How do we think about this customer group? How do we think about this customer group? How does it work in this system versus this system? So a lot of the challenges just came from data migration. The NetSuite functionality itself is pretty simple to use and easy to follow. And so since I've used it for 5 years, a lot of kind of those general questions we were able to knock out quickly just because I knew how I wanted it to work at least, which my opinion was the only one that mattered.
Nice.
But it was a pretty streamlined process. We were also pushed to do it fast. And so I think we did it in like 6 months.
Wow.
And this was all during COVID. So we started implementation in January of 2020 and went live in June of 2020. And so
Holy crap.
there was new teams working remote, all online. It was quite the experience. So there were definitely some things we found that, we should have done that better. And so we've had to go back, obviously, and iterate on it a little bit. But overall, it went pretty smoothly.
Nice. Awesome. And I don't want to plug Flowcast too much, but you use this at both your last companies. Was there anything that you kind of learned along the journey that helped with more of an operational type solution getting implemented?
Yeah. So when I joined Lead Venture, close took about 20 days. There were a few issues. One was headcount was very low for the size of the business. Tech was pretty bad. And then there was no centralized place where we were kind of keeping track of who needs to do what for close. And then reconciliations just weren't happening. And so one of the things when I first started, it was, we need Flowcast because I did a few closes managing in Excel, managing recs in Excel. I was like, this is absolutely horrific. I feel like I've gone back to the Stone Age. And so I think it was like week 1 at Lead Venture, I got hit up by a sales rep at Flowcast asking if I wanted to buy. I said, yes, but not right now. I got bigger problems. So we ended up implementing in August. So it was 2 months after we went live on NetSuite. And kind of, we saw a lot of different things. We were able to kind of re-examine the entire close process and operations and try to figure out what's in notebooks, what's not in notebooks, what's in this Google sheet that no one updates, what's in a system called Vena had like 3 checklist items in it that someone had to do. And so we kind of were able to take the opportunity to kind of regather all that information, implement a singular checklist. And then we found that some entities, no one was really managing the close. And so we've had to kind of reach out and say, what are you doing the close, and redocument it and get it in. So we've taken the opportunity to kind of consolidate, leveraging Flowcast, all of those checklists for all those entities so that we have more visibility and control over what's happening in the close. And so we can ask more intellectual questions rather than, did you do it? We can skip that one, and now we can get into, well, you did it, but it looks way different than last one. Why? So we can ask more of those thoughtful questions than kind of flying by the seat of our pants. And then it created, obviously, kind of the controls around ensuring Recs got done. As we've grown, we've looked at kind of how do we get other teams kind of leveraging it. And so kind of the ongoing question is, how do we get AP more involved, payroll more involved, finance more involved, and how do we leverage kind of those operational stuff with the system? And so kind of ad hoc, we add checklist items. We're leveraging kind of the Remind app to ping people when we need data on a regular cadence. So, and as we acquire businesses too, we're kind of structuring, we set up the new entity in Flowcast, we make sure the opening balance sheet ties out, and then we go through and try to figure out, hey, what are the steps we need to do for close? And so it's providing a centralized kind of organization for us around the entire financial management of our kind of month.
And I have to imagine your goal is to get things as standardized as possible on a monthly basis for each of the entities you're bringing in the fold.
Yep.
Yeah. And then on the M&A side, you must have a fairly built out checklist. Like some of this is a bits of rinse and repeat, and then there are going to be the nuances of every business you have to figure out, but you've developed a process to make that pretty smooth.
Yeah. Yep. Pretty well. Yeah. Each time it's learning, because it's like, oh, I didn't ask this question, I should have, or this question doesn't apply. So you kind of have to tailor that list to each business.
Or I can't believe I had to ask this question.
Yeah. Yeah.
You don't have financials?
Yeah. So sometimes you got to start at ground zero, and you thought you could skip ground zero.
Nope. I will say, man, building up for ground zero is kind of the fun stuff. That is, you learn all about the company when you're building, but yeah, it's not necessarily fun in the moment, the amount of manual work that goes into it.
Definitely is entertaining.
Curious for the audience, some interviewing tips, or how'd you get that job? Like, what was the process of shifting from Viewpoint to Lead Ventures?
It was, so the CFO I had worked with him in the past on ASC 606. He was CFO of a different software company in Portland. And so he and I were familiar with one another through kind of working through some of those 606 fun topics together. And he knew kind of Viewpoint's life cycle and journey, and recognized that it was about to be the exact same thing at Lead Venture. And so he kind of threw out, hey, would you consider leaving and doing kind of the same thing all over again that you just did at Viewpoint? And to be honest, I really enjoy the chaos of it, of kind of that fast growth acquisition stage, and since Viewpoint had pretty well settled down into kind of that public life cycle of quarterly reporting and 4 different sets of auditors coming in and asking you the same question 4 different times, I was kind of ready for a new challenge.
Yeah.
So I jumped at the opportunity. The interview was, since I knew him, it was pretty informal. He did a lot of kind of reference calls more so than anything to make sure I actually could work and do stuff. So he called a few people I gave him contact info for, and then he called a few people who I didn't know he knew that I knew. And so he kind of did his own homework on me, and then decided to hire me for some reason.
Nice. The good old back channel reference. Those are, for those people who do hire on the line, the back channel references are important, and that's where you get the good stuff. And I mean, I've seen this time and time again. It's like building your career in whatever field, but especially in finance and accounting, it is about being good at your job, who you know. If you do those 2 things, you will get pulled into your next roles, and opportunities will fall in your lap like that. It's not always, let me find a job board and prepare a cover letter and submit my resume, or you don't always have to work for a recruiter. And like, when you're wanted, those are the best work situations, and it's someone you already know you're going to work well with. It's less of a risk to take that next position. So like, I'm not at all surprised that's how you got your job. I was leading the witness a little bit on that, just so we could have the example for the for the audience here.
Yeah.
But all right, and let's talk about the new role a little bit. Like, it seems like a fascinating position. Like, yeah, the chaos of it to me seems wild. So I'd love to hear about, in excruciating detail, what are you doing now? What's the work-life balance like? What does the team look like? Are you a one-man show? Just tell me all about it.
Yeah, so the role is interesting. So it kind of bridges three things: M&A, revenue recognition, and then operations. So it's kind of doing a few different things. So I've got a team of 2 core people, 1 revenue accountant and 1 M&A accountant who report to me. And then as we acquire businesses, any of their kind of local accountants then roll and start to report to me as well. So depending on where we're at with like people transitions and kind of where the company is with integration, I can have anywhere from 2 reports to 10 reports, depending on how many people we've acquired. So on the RevRec side, it's just kind of maintaining 606, making sure we're doing things right. And then on the M&A front, when we buy a business, Eric and I on my team, we go in and we basically have, I guess I'll call it a PDC list of here's all the questions we need to ask you and here's all the support documentation we need so that we can generate that opening balance sheet. And so we kind of work through the list of just kind of what do we need to accomplish for this opening balance sheet. Then we start to dive into how do you recognize revenue? How do you bill your customers? How are your customer contracts set up? And so then we do a deeper dive on how are we doing the revenue side of things to make sure we're doing it under 606. A lot of the companies we acquire are operating on a cash basis model. And so you've got to really figure out those things to know,
oh, wow,
to book an unbilled receivable. Do we have deferred revenue? And so a lot of it on the revenue side is starting from scratch completely to kind of really dive in and figure out how to treat it.
And since you're acquiring software companies, I have to imagine you're getting some longer term contracts. And so you're going back in time and restating a lot of this work, presumably.
Yeah. So a lot of our billing is monthly for these businesses. So kind of their cash basis and their GAAP kind of align. It's more of when did revenue start? And so it's kind of establishing deferred revenue that they never had. And so on a month over month basis, we can rely on their cash basis and just know it's not 100% accurate.
Okay.
And then making sure we have the balance sheet side of it right. For some of them, there was one acquisition in particular who had on-premise software sold in a subscription model. And so then it was, do we need to recognize point-in-time revenue with support services? So then we had to dive in, how are the contracts structured, to make sure we didn't have to start kind of the old school software model again with this business. Fortunately, they have month-to-month contracts, and so the timing is the same. So that kind of saved us from that headache.
Yeah.
And then we kind of put a bug in the ear of don't sign annual contracts under this model, please, to the management team. But that's kind of what we have to do on the revenue side. One of the acquisitions we did this year, they were a cash cow, and so they didn't actually have financial statements. So it was starting from zero. I had a checkbook and a bank statement, and that's how they managed their financials. And so then it was kind of, okay, well, what's AR? Well, they didn't know what accounts receivable was. And so some of those types of conversations where it's really fun and kind of a discovery of how people run their businesses, and each time it's a learning experience. I'll put it that way.
That is fascinating. What a spot to be in. We make so much money that I don't care about our financial statements. We'll be fine. We'll figure it out later. That's awesome. All right. So it all starts with, like RevRec. That makes a lot of sense to me. You get the opening balance sheet set up. You manage the team for a while. So what does that team transition generally look like?
Yeah. So we kind of start with kind of processes. So one of the first things we try to move is banking. And so it's figuring out how do we move to our consolidated bank and get your customers to send. So that's kind of where we start. Then we move to AP. And so usually it's like one guy doing all the accounting and financials. And so that we move that and consolidate that into our corporate. We migrate all the vendors over, we do vendor validation on them, and then have kind of the central team take it over. And so then kind of what we end up getting left with that's still sitting there is the quote to cash process. And that's where it gets fairly complicated for how fast can we transition this over. Some companies have built custom CRM and quote to cash engines. And so those will take a lot of unwinding to merge them into our tech stack. And so we really have to kind of evaluate what's the gain by moving them over, and then what are the risks from moving them over. So we have some acquisitions we're able to move over into NetSuite and our tech stack pretty quickly. And then other acquisitions, because of how the custom system they've developed is so automated for kind of provisioning of licenses and stuff, those we kind of have to take a step back and say, we're going to put this on the back burner. You can still operate as is until we can kind of really establish a system to kind of facilitate it. So that's kind of the next phase. So kind of quote to cash sits out there until we can figure out how to bring it into our CRM, our ERP, which usually means whoever was running it is still running it in that capacity. And since we've freed up some bandwidth, we try to figure out, hey, how can you help out in other areas of the broader Lead Venture business? And so we look for ways to integrate those people while they're still maintaining the core business, but also get them exposure to the rest of the business to kind of help out in other areas. It's kind of our approach.
And so quote to cash, that's a really difficult challenge. Are you using Salesforce internally?
We are in the process of implementing Salesforce.
Okay. And then have you noticed, is Salesforce the common CRM when you acquire companies?
I'd say it's 50-50. Some are on Salesforce, and then some of our larger ones just built a system to do what they needed it to do. And so they've got kind of their own custom developed CRM that works, but reporting is really difficult to get out of it. So the goal is to get them moved over eventually.
I think I want to touch on this because I think understanding the CRM is a really underappreciated part of accounting. You know, I think you and I have good exposure because we're from the revenue world, and you're going in Salesforce, presumably looking at contracts and things like that. But, you know, really a lot of accounts don't interact with the CRM that much. And it is a core system of record for one of your most important departments, which is sales. And so really learning the CRM, how that quote to cash process should work, and those various integration points, that stuff's brutal, man. Like just doing Salesforce to NetSuite is hard enough, let alone doing a Salesforce implementation, then acquiring a bunch of companies. Half of them are on Salesforce, half of them are on this. And then Salesforce, no two instances are the same, right? It's like everything's a little bit more custom, even if they're getting Salesforce. So are you guys responsible for that integration, or do you have a separate team that handles the actual like tech integration side of it?
So right now in our Salesforce implementation for the broader company, so I'm actually the finance track lead. So I'm working with our billing and collections team, sales team, customer success teams as kind of like, what do we need the integration points to be between NetSuite and Salesforce? And then how do we make sure the sales processes that you're deciding are our requirements don't impact the finance requirements? And so we're trying to currently build a framework for getting all of these kind of aligned in process so we can bring acquisitions on quicker. Up until this point, we kind of allowed companies to operate independently from that quote to cash process. And now we're shifting and moving to a streamlined, standardized approach. So in the past, the internal systems team did most of the CRM migrations. There have only been, I think, a handful, maybe 3 or 4 that have been done. But kind of the new philosophy is going to be, as we acquire, we want to bring everyone under a single process, a single system, so that reporting's easy. We've got insights into the business to know how everyone is doing. And also we can move off of these legacy tech stacks a lot quicker. Is kind of the ultimate goal.
So sales and finance, that whole quoting process and what sales wants / needs versus what finance wants / needs. I'm curious. So those could be very contentious discussions because oftentimes like what finance needs is at odds with what sales wants. And so how do those conversations go? Like what's the power struggle? Like who wins generally?
Yeah, I'd say here it's been good dialogue. So it's been good working with those in the sales track because everyone comes in with their point of view. And so it's really, if everyone's going in with the mindset of, I want to understand like finance's point of view, or I want to understand sales point of view, and just try and, instead of going in with an agenda, going in with a general kind of, I know what I needed to do or what I wanted to do, but I also need to understand why that will or won't work for the other organization. I'd say that's kind of been the approach with most of our team members, which has made it go really smoothly. And from a finance and sales perspective, we definitely push the envelope from a finance side, where it's like, well, customers got open invoices. You shouldn't sell them anything new because they owe us money. And so a lot of it's coming to a compromise where it's like, we'll build this rule in, but then we'll have a workflow to offset it if we need to. And so we're trying to take the approach of, here's the hard line, and then here's how we can get around it if we need to, so that we don't necessarily cripple sales. Because the last thing we want to do is cripple the revenue generating group by the cost only group. So we're trying to find ways to compromise and make sure we're maintaining controls and maintaining kind of those financial things that you want to make sure sales doesn't do, but also not hamstring them so they can't sell anything.
I feel like that's the end game of most companies. You want to standardize as much as possible, limit discounting, try to move on to standardized pricing, but then you always have to have some workflow around exceptions because, unique clients come in the door. Or maybe it's the first time you've signed a company this large, and so you're going to do something special and unique for them. And so like finance needs to be a little agile with that. And sales is good in negotiating, man. If they're not good in negotiating, they shouldn't be there. And so in those discussions, it's a tough negotiation. And then I think everyone in finance should remember that any control we put in place does potentially limit their ability to make money. So there's a personal implication behind all of this, whereas finance, we don't have that issue, right? It's just like, no, it should be done this way. I don't have commissions at stake. This is the right way to do it. It's a weird dynamic, but honestly, one of my favorites within a company as well.
Yeah. Yeah, we're trying to avoid napkin contracts, handwritten notes as much as possible.
I audited one of the most popular shows of all time, and the origination was on a napkin contract. Dead serious. They handed me the napkin for the founding of this show. It absolutely blew my mind. Anyway, so what you're touching on is one of my favorite parts of like where accounting is going. It's a lot more operational. It's not as much reconciling stuff and being in the weeds. Like you're really impressive with technology and good at automating that kind of stuff. And then you get to work with other departments. Like you just told me you're working with sales and customer success. Have you been able to get even further across the organization? Like, do you ever touch, marketing or engineering, or what does that look like? And then just like, as a person, do you like this role more than what you used to be doing?
Yeah. So first question, other organizations. So we've really been in this Salesforce project, really digging into like each department and how do you view things? What are your pain points? And so it's been working with our digital advertising group, not so much marketing, but some to the degree of, do you have any problems with how we do this from a marketing standpoint, if this goes out to a customer? So that there's a little bit of touch there. We've been talking to legal quite a bit, making sure that we're not going to throw anything off with so we're touching a lot of different groups, customer and tech support, software development, not so much. But we've got IT in there because you've got your Ring Central or your phone system integration with Salesforce. You've got kind of the licensing side of it that you got to figure out, single sign-on. So there are kind of lots of players in all these meetings, plus all the consultants from all the different firms we're leveraging to do this. So there's a lot of visibility and exposure to lots of different people with lots of different perspectives, which is fun and exciting. I enjoy it a lot more than the day-to-day booking journal entries and reconciliations. I will admit, sometimes I do go in and do reconciliations every now and then just because I want to, because I miss it sometimes. But the volume and kind of the rolling monthly process is less interesting to me than kind of this more rapid, chaotic environment where you're trying to achieve a more optimal way of doing things and really impact something than just kind of rolling financials.
There is something oddly soothing about reconciliations. I, for some reason, have found myself doing one somewhat recently and was like, I kind of miss this a little bit. But yeah, not necessarily every single month, but just a little bit.
Or just nerds.
Yeah, just nerds. feels good when it balances. You get you get that little dopamine hit. You know, it's a good feeling. All right, super high level question. Operations means a lot of different things to different people. How would you define operations?
I define operations as figuring out how all the different aspects of the business work together to achieve a singular goal. I think historically, you typically only see operations type roles from system side, from sales side, but then you don't really have this operations concept for other groups. And so when I was in the assistant controller role, I was doing a bunch of operational stuff. And it wasn't until it started taking 80% of my time that I kind of raised my hand and said, hey, we need to figure out how we're going to handle all this ad hoc stuff, because your day-to-day people are grinding, they're doing monthly close, reconciliations, they're telling the story of the financials to make sure they're right. And then kind of operations was always kind of thrown on the back burner of, oh, you can do this too. And so I think it's really, at least from my perspective, if you're in a high growth, it really becomes critical to making sure those operational things go well, that you need someone kind of focused on it, to communicate with the other departments, to make sure everything's what you're doing, improving in the finance org isn't going to impact customer success, isn't going to impact sales. Because I think a lot of times issues arise because no one's communicating, but it may not be anyone's like role specifically to communicate those changes, which I think is where some of the today breakdowns are.
That makes perfect sense. Yeah, if it's kind of everyone's side job, it's not going to get prioritized, not going to get done. When you think about the move to your new position, how do you think that's impacted your career trajectory? Like when you were doing the assistant controller role, how did you see that playing out versus you make this move? How do you see things playing out now?
Yeah, I joke, I don't know what I want to do when I grow up. So when I was in the assistant controller role, I struggled with seeing myself necessarily as a controller and kind of following the traditional accounting track. And kind of one aspect that I've always loved doing is streamlining process and doing process improvements. And so I viewed this role as kind of an opportunity to expand outside of just core accounting journal entries and really interact with other aspects of the business, try to get a more holistic view of how the company operates, how other departments think about how they work. And so for me, it's really going for, I'd say, a more broad skill set, leveraging the accounting background I have, but also acquiring more of that broad knowledge of how an entire company works and how all the different departments think. So when I go to the next role, which is, I don't know what it is, but I'm hoping that I'll be able to leverage kind of all of this more broad knowledge to really impact change at another organization, to do either do the same thing all over again with another software company that's rapidly growing, or move to, I don't know, a consulting role where you go in and kind of help think about these things for smaller teams who can't necessarily have a dedicated headcount to it. So for someone who's not necessarily trying to go the controller track, I think this role has definitely helped to kind of expand my skill set for whatever that next step is.
So a lot of people are very intentional with their careers and like, here's the end game. You seem to be opportunistic in what's interesting to me. I'm going to try to take on that position. Is that a fair synopsis of it?
Yeah, I think so. I mean, I'm motivated by learning. And so if I can move into a role where it's going to challenge me, then I'm likely to jump on it. If it's leveraging my base and something that I can pick up and learn to grow my skill set, I'm more willing to jump on that than going for a role that's just like one new thing. I'd rather move to a role that's like 5 things I know and 10 things I don't know, to try to kind of continue to build that tool belt.
So if you, let's say we fast forward, I don't know, 4 years, you're ready to look at your new opportunity. You have a consulting firm and another company offering you the exact same salary, exact same lifestyle to either do consulting or run back what you've done at Lead Ventures. Which role would you take?
I'd probably do the run back.
Why do you say that?
I think there would be more motivation behind it for helping a single organization kind of through the life cycle, because it's a pretty long process to do if you're starting basically from zero. If they're just starting the acquisition phase of their life cycle, then you've probably got a good 3 or 4 years of that to get through, and then try to figuring out kind of the back office. How do we optimize what we have today? It doesn't happen overnight. So I think the longer term challenge than kind of the short term consulting gigs would be my leaning initially.
I've heard similar from people who moved from consulting in-house. I've heard there's a lot more, you feel much better seeing a process through, getting a project done, and then staying there and seeing the ramifications of it, and whether it went well or not, being there to fix it if something didn't go well, and being there to just kind of be happy about the work you've done if it does go well. So I don't know, makes perfect sense to me, man. I'd probably do the exact same thing.
Yeah.
Awesome. Well, I think we're coming to the end of the road here, but just for the audience, I think you've had like a really cool career progression and set yourself up really well for just even better career. So like, what advice do you have for the audience in terms of career development, moving up in the ranks, and just being good at your job in general?
Yeah, I'd say first piece of advice is take initiative, jump on opportunities to do new things, even if you're strapped already for time. I think a lot of my early learning was asking how I can help others, which gave me more exposure to more things. I'd also say bean counters are typically associated with cubes and staying inside a cube and not venturing out. I think there's a lot to be said for going to kind of some of the, if your college does like social hours with people you graduated with, or if there's an opportunity to go to your local Big Four firms for events. I think there's a lot to be said for kind of getting out there and meeting other people so that you can kind of start to hear what they're doing. One of the big things I think that helped me when 606 came out, we kind of assembled a Portland RevRec group. And so we met almost weekly to kind of go through the guidance together. And so we still bounce stuff off of each other every now and then when we run into complicated things. But it kind of built this kind of core professional group that you knew outside of your company, which I think really helped for kind of, you said it earlier, like it is about who you know to some degree. And if you're staying in your cube, you're not going to know anyone outside of who's within your range of cubes. And so I'd definitely recommend like making sure you're going to user conferences, getting to know other people in your similar field so that you can kind of build and establish connections.
Awesome. Great advice. You've certainly practiced what you preach on that front. I've seen you at a lot of Sweet Worlds, and you go to networking events and everything. So are you heading to Sweet World this year?
I am not this year.
No. Darn. Well, I'll be there in a couple of weeks. All right. Well, maybe I'll see you in a future one. Well, dude, John, thanks so much for taking the time out to walk us through your career and provide advice for the audience. I think it'll be really helpful for people and put a little light on the operational move that a lot of accountants are making out there. So congrats on your success. And like I said, thank you so much for taking some time to join the podcast.
Thank you. Thanks for having me.
That's John, the finance guy, Hardy. There we go. All right, everybody. I hope you enjoyed this episode. Have a great rest of your day.